Welcome to the January 23rd, 2020 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, once a week, this video replaces the written commentary portion of our nightly report. Hopefully this video serves as a nice change of pace from the usual report and offers some insight as to how we set up our charts, what indicators we use, what time frames, etc. We're going to run through a few broad market averages, then cover open positions, and then we'll get into potential setups over the next few days. So let's get to the charts. First up is QQQ. You can see the strong uptrend here above the rising 20-day MA, really above the 5, 10, and 20. And the price action's been a bit wicky here of late, showing some signs that potentially the trend is beginning to lose some momentum here. There's 4 bars in a row with closes well off the highs of the session or lows of the session due to a reversal. In the short term, if Thursday's low doesn't hold, then look out for further weakness. Onto the S&P 500. So a pretty clear reversal bar. A break of this low could lead to further downside. IWP, a bearish candle at the highs, which would have been confirmed by a close beneath the low of Thursday, but the price action dipped below there intraday and reversed back above the 5-day MA. So as long as Thursday's low holds, we could see a new swing high here within the next few days. Decent reversal in the mid caps, MDY. Here's the breakout, and then the pullback, and then today would be considered a washout. Basically takes out the prior pivot, takes out the 10 and 20-day MAs, and closed near the highs of the session. And IWM also had a breakout which failed, and then the pullback here. So a 2-day pullback to the breakout pivot, and then Thursday's action proved to be the shakeout, just like MDY, with a dip beneath the 10 and 20-day moving averages and a close near the top third of the day's range. And I just wanted to go back to IWP for a second. This is the Mid-Cap Growth Index. This is an ETF we track because most of the stocks we trade are growth stocks, so we can't always get a good idea of what our type of stocks are doing when we look at QQQ or the S&P 500. And we can't always rely on IWM to be a solid representation of growth as well. So that's why we use IWP. And on to open positions in the model portfolio. We stopped out of about a third of IPHI beneath the 10-day MA here. It just clipped us and it opened at the stop and then rallied higher. We're still long. The rest of the position, though, from about an average price of 75.24, I think. So around this area here. As long as the price remains above the 10-day MA on a closing basis, it should continue to move higher. TDOC, Teladoc Health, looking great. We're up about 20% from our entry on 1.7, so looking pretty good. And this stock is holding above the 5-day MA, so very strong uptrend. DDOG, our long position was triggered on 113 over a few days of tight price action. There was this washout here on 114, which just missed our stop by 20 or 30 cents, and a decent recovery with the price action now closing above resistance at 42 the past few days. But it looks like now this downtrend line here might be in control, so we could see a few more days of chop in this 42, 43 area, and then we look for an attempt to break out above 44 on a pickup in volume. Shop, we're still long with, I believe, 70% of the initial position from an entry around 375. Continues to hold the 5MA, which is just a really strong uptrend. Next up is RH. We entered on 117 after this little bull flag type pattern here off of a shakeout from the 50MA. Note the price action dipped below the prior swing low and the 50MA and reversed higher. So there was the false breakout on 117 followed by a few days of chop. At this point, if it can get back above 230, we look for the price action to possibly then test the highest of the base around 244. SC, we're up about 16% in from an entry, an average entry price of 38.46 that started on 12.6. So right around here, I believe. So this area around in here, and we've been long since. And the gap up on big volume is a great sign. And we'll look for the 5MA to provide support within the next few days. DXCM, we're long from 235.30 on 117. So we missed the breakout here at 220, but we bought the pullback on 117. So in this area right here, it's still looking pretty good. It's a pretty tight pattern. Earnings aren't until 213. So we have about 3 more weeks of trading before we have to make a decision on whether or not to hold through earnings. In general, we don't like to hold through earnings unless we have a profit buffer of 10% or more. AMAT, we are long from 62.72 on 1.9. So the trade triggered on this day here, 1.9, where it stuck its head above the prior swing high, but failed to follow through. And then another false breakout on 114. But as you can see, the price did manage to close back above resistance at 63 on 116. So we'll look for the price action to continue to trend higher above this uptrend line and the rising 10 MA. And the final position is YNDX. We're up about 5% in YNDX, and this was originally purchased, I believe, on a pullback on 1217 from this breakout here on volume. You know, pretty much it's in a rising channel right now, and we're going to look for a breakout above this channel, and then from that point we look for the angle of attack to increase. Let's cover a few potential setups for the next few days. QCOM is potentially in play after a 3-bar shakeout following a strong breakout to new highs here on 117. Look for the price action to hold above the 20-day EMA over the next day or two, and then form some sort of reversal candle. If no reversal candle, then look for it to move back through this 93 area as an entry. PTCT, there's a strong rally from an ugly sell-off below the 200-day EMA, led to a 60% rally with very little consolidation. And then you have this nice consolidation here, led to a false breakout, and then a shakeout, and now another breakout with a bull flag pattern forming here. 1, 2, 3, 4 days up, 4 or 5 days up, and a 2-day pause so far. If the price can break through this 54.50 area, it could be off to the races. And we can also go over D-Dog again if you're not long. Datadog, it could potentially be in play, I'd say, on a pullback to this 41 area, or in a breakout above 43.70. Plan looks like it's forming the right side of a long base here, sort of like a handle here, though it was a lower handle. And the price action has certainly tightened up over the past few weeks. A break of this downtrend line here, and then a breakout above the swing high here are 2 possible buy points. And if you look on the weekly chart, there's that nice big volume on the move back through the 10-week moving average and the downtrend line, and then higher volume on the climb off the 10-day MA, and then volume dried up last week on the pullback, and it looks pretty light this week. So if it can make it back through this high here, 58.46, it could spark the next wave up. And INMD, in mode, show a recent IPO from last August. Pretty explosive price action. It's a mover, that's for sure. There's a break of this downtrend line, and this is about a 40% base, which is a little bit wider than we prefer. But as I mentioned, this is this stock trades with a big ATR. For a stock that's this volatile, for it to pull back 40% would probably be like a stock pulling back 25 or 30%. So we're monitoring the right side of this pattern here as it climbs up. We're looking for a pullback, in this 45 to 55 area, where we can take advantage of some short-term weakness and try to pinpoint a low-risk entry. And the last chart of the night is an MJ, which is an ETF, a marijuana-based ETF. We like the sharp move off the lows, especially after what looks like an undercut of the prior swing low. And so there was a little bit of a shakeout, and then it ripped higher. If it can hold above this 9-day MA where it's at right now, and reverse above the 2-day high, possibly could be in play for, this is a 20% move up. So if we're to do a measure move, another 20% up would put it around 23. So an entry over the 2-bar high, it could probably rally into the declining 200 AMA. All right, so that's a wrap for tonight's video. Thank you for joining us. If you'd like to learn more about our style of trading, you can visit our website. We have a great blog at www.morpheustrading.com/blog. The blog's about 10 years old, so it has a ton of articles on entries, exits, how to trade gap ups, how to trade earnings, etc. You could spend a few hours in there, at least for a few days, I guess, if you wanted to read everything. And you could also sign up for our nightly newsletter, the Wagner Daily, which is $49 a month or $2.99 for the full year. Thanks again for joining me, and we'll see you next week.